I did say that this would be your first level of resistance. It looks to be holding up at this stage, very early days. But if you actually look at the RSI and MACD, it would suggest that a sort of a bounce is coming. Would it be on like this bounce? We go up a bit and down. So perhaps we'll draw a line here. Could we see something like this? It is set up for a rebound. A lot of the bigger stocks, weighted stocks, are still doing reasonably all well. It's still all in the bull market. Apple's not. So if this earnings can put Apple above, get back into a bull run, then we might see that sort of bounce that I still kind of hopeful for. I mean, the markets are horrendous. There's one hell of a crash coming, but I still fancy some sort of bounce. I don't know why, but I just have this feeling that we're not there yet.
That was a snippet from last week's video, and if you don't know, you could stagger a guess to see, did that prediction play out? There's a few hints behind me. If you have a look, you can maybe work it out. What's the crack, everyone? Welcome back to Buy, Hold, Sell. I hope, of course, you are all well. We did it. We did exactly what we hoped would happen. Let's get straight into the S&P, and as you can see, we did bounce. We did say the MACD and RSI was massively oversold, and we were due a bounce. We got said bounce. People say TA is just a crystal ball. It's not. It really is not. Go in and watch every S&P prediction on the last 6 weeks. Every single one of them is pretty much came on the money. Did say on Thursday it was all dependent on Apple, and as you can see, the green stick came, which is exactly what we needed. It was a bit of a mixed bag in terms of an earnings report, bit of a dampish outlook, but the market still liked it, and that is all that friggin' mattered. Green day Thursday, stock shot up over 3%. A green day again, and now we have a buy symbol coming on our chart, which is just given as an indication that this is going the right direction. Now, in that last video, I did say we need to get above the 200-day moving average so we can push on. We're not there yet. Still squeaky bum time. And just like the S&P on the day chart, we're not there yet. We are not in a bull market. We're kind of in no man's land right now, let's just say. I like the fact that the charts look like there's plenty more movement still to come. And again, I just fancy it to go. However, is the good times back? Are we going into one of the greatest bull runs of all time? No, absolutely not. Now, there is people out there that are saying things are different. You know, the AI bubble is going to drive it up, and that may all play out to be the case. I've said it before, the NASDAQ stocks are so beaten down, they're not moving that much. They're all 50, 60% down again this year. So there's bargains to be had at these levels if you're wanting to buy long term. But let's just have a look at what I think is going to happen in the S&P. I think we'll push on, but once these things become overbought, we'll go back down again. And when did they become overbought? Well, you can see where they became overbought. These areas, this is where it pushes on. But look at this period here. We were overbought here, and then it actually took 61 days, took 2 months. But if you were panicking and being scared, you would have missed a 9% rise in the S&P. So again, let the charts decide. Learn how to do this, guys. I'm not surprised if we see another sort of 1%. We might even get a bounce on Monday, or maybe a bit of a cool off, but I think we'll get up to about this level. Then it'll get a bit sticky. Is there enough in the tank to get us above this? If it gets above that, then you're probably looking at sort of this level. We should see the markets then push on a bit further. Then we're really taking off, and you'll have to go back to looking sort of at January time last year. But let's not get too carried away, because there's a lot of people that would have said here, oh, we're back, the good times are rolling, and then pants down. Then it's sold off massively. Then there'll be people going, oh, we're back, the good times are rolling. So do not let this market suck you in and then they rip the whole arse out of you. Do not let it happen. Enjoy, learn the swing trade. The course is down below, still £99 or equivalent in your currency. That's going up to $199 at the end of this month. No longer doing $999. The price is going up because it is an absolute steal at that price. You will learn all of this. This is all trading courses. These are all things that I have learned over the last 5 years, and I have put it all in, including the blood, sweat, and tears. But these are the types of things we're sharing in the Discord. If you want to get into that, even just for a bit of advice, Discord link is down below as well. The trading course does also have lifetime access to the Discord, so it's maybe better value as well. But anyway, there you go. You can see it looks like we've got our bounce for now, at least. Open up a 10x position on the SPY. 3% up 12%. People are up 33% in Greatland Gold. I kept adjusting my stop loss, adjusted 8%, up 19% now, closed at 17% gain, locked that in, just was being very careful, happy to take money. I jumped in and out of a Tesla trade, took another 5% of this, closed it out at 23% in 3 days, took 5% today, another 5%, which closed out at 5x Tesla, 7%. Then I bought some of our longer hold play with those profits. Last week was phenomenal, up until about 3 p.m. on Friday, which we'll get into at the end. We have a look at this here. Market's got an unexpected boost from Washington. Will it mark a turning point? A surprising borrowing plan from the Treasury Department helped thrive down bond yields and revive stocks. The more money you pump in, more stimulus, the market always likes that. That's just makes perfect sense. But let's look at Big Buffett. Buffett, greatest mind of all time in the investment game, in my opinion. Buffett's Berkshire posts bigger loss as stock falls. Operating profit sets record. First quarterly loss in a year, and he's saying cautious, which has been a similar sort of pattern. Apple said the same. Tesla outlook, bit grim, bit grim. Open your eyes, guys. They're saying all this because it's coming. In the low markets, when they were taking out huge loans and everyone was going, why is the Apple taking out huge loans? Because it was pretty much free money. You look at these companies and how they're reacting to things. When they're borrowing loads at low interest, good times ahead. We got a big pump. When they're saying cautious and not wanting to spend and making cut measures, there's something that they're preparing for. Cash is not trash. You can go on and read this here. It does say that they are sitting on the biggest cash pile that they have ever sat on. Why? Why is he sitting with all that cash? It is because he anticipates bargains to be had, and he's also anticipating I shouldn't have all my money in. And that is why on this channel, we have sat very cash heavy for a very long time, because we sense there will be bargains to be had, and we are waiting patiently. Also, to take note, short selling debuts in the Philippines after a 27-year wait. Average daily stock transactions shrunk 40% in 10 years. Foreigners may stay in the market with short selling. So with more short sellers coming on, more borrowing of shares, more manipulation, happy days. So let's have a look then. The S&P 500's rebound is a risk. Forward guidance increasingly trails analysts' expectations. Tighter financial conditions are starting to weigh on growth. Going to look into the Bitcoin charts, but it's still floating around that 34,000, 35,000 range, which we said would be resistant. So it's holding up well. It's not just sold off. It's staying strong. It's trying. Unfortunately, I usually go to Investopedia. I've been doing it for years. We'll cover sort of a summary of what's coming this week, but for whatever reason, they seem to be putting out the information a lot later than when I'm doing my videos. So we're going to have to go back to Reuters again, which for those that don't know, I did feature in 2 Reuters articles. Your boy did do that. You can go in and check it, read it. The links are down below. So the headline is, Wall Street ahead, stock investors see green light in falling treasury yields. Treasury yields go down, stocks go up, dollar goes down. These are just generic things, and this is why you can learn to swing trade this. You don't ever have to go short if you don't want to. There is always a Susie for every Sally. If something goes up, there will be something that has to go down. Learn this. So hopes that are right in treasuries has run its course and are tempting some investors back into the US stock market after months of long sell-offs. And we did have the Fed pause, just slap bang, pause. And people are thinking, well, that's them getting a bit closer to the end now. We've been saying that for a while, but thought there's going to be a pivot this year. Doesn't look to be happening. The relationship between stocks and bonds has been a tight one in recent months, with equities falling as treasury yields climbed to a 16-year high. Higher yields offer investment competition to stocks while also raising the cost of capital for companies and households. Analysts are saying we had an extremely oversold market in the midst of a strong economy, and the Fed coming out a little more dovish was the kindling we needed for a rally. So people are feeling like massively beaten down. News isn't so bad. We're going to put some more money in. I can understand why it's going to happen, and I'm going to enjoy why it's going to happen, but I do not think it's going to last for very long. US employment data was showed a slight gain in the unemployment rate and the smallest wage rise in 2.5 years, suggesting that the labour market is cooling, bolstering the case for the Fed to stay its hand. The S&P closed 0.9 on the day, and it just touches on Apple's offering an underwhelming outlook, which is surprising that it pumped, to be honest. When I seen the headline and I went, oh, and I went down 3% in the after hours, I was like, oh no, this is it. But market does what market wants. Another one of my long holds had a fantastic week, in and around 20% up. That was very good to see. Across the board, it was a very good week up until about 3:30 when Premier African Minerals, one of our other longer holds, decided to drop in RNS and the thing sunk 15%. And about 40% of my swing money that I made, I did pump into Premier African Minerals for it to lose about 16% on Friday, just as a result. Everything was finishing up. was disheartening. I have recorded a Premier African Minerals video. It will be out tomorrow, so please stay tuned for that. If you can please like and subscribe to the channel, that helps me massively. Consider all the things that we've talked about in this video. Enjoy the rally. We'll keep an eye on it. We'll know when it's turning. Please get in the Discord if you want to know the alerts. Otherwise, I will catch you in the next week ahead video and see you throughout the week. Peace.